G'day folks, welcome back to another share review. I'm just doing a quick review on Nvidia and Meta since our last video on these two companies. As you're probably aware, Nvidia's taken a bit of a tumble overnight, over the weekend. So we'll have a look at that, but also looking at Meta and see where that's heading as well. First, looking at some fundamentals and the outlook for Meta. The financial performance, the company demonstrates strong fundamentals with anticipated growth of 56% by 2026. In insider trading over the past 3 weeks, insiders have sold approximately $12 million worth of stock, and the stock price currently trading around $659.88, reflecting a 1.95% increase from the previous close. For Nvidia, in terms of its performance, the company has experienced significant growth with 171% gain in 2024, driven by the AI wave. In terms of insider trading, no recent significant insider transactions reported, and the stock price is currently trading $118.42, marking a 16.9% decrease, influenced by market reactions to emerging AI competitors. So before we get stuck in the charts, make sure you hit that like and subscribe button to support the channel. So here, first off, I've got Nvidia, and we always look at the long-term trends. We've got the monthly, the weekly, and the daily. Now here you can see on the monthly price chart, the price is still well above its respective moving averages, whereas the CCI is broken below, giving us a bearish signal. And that's in response to this bearish divergence, a very long-term bearish divergence we had, okay, starting back in 2021. The CCI was declining with lower highs versus higher highs on the price. So again, we always pay attention to that. Doesn't mean you couldn't trade it in the longer term, but again, looking at the monthly, just always be cautious of any potential reversal. On the weekly, likewise, we had separate divergence. So if I zoom into this one, we've got a couple of divergences here. We had a bearish divergence back here versus that high, and at the moment we've also got lower highs as well. So we can potentially extend that with the CCI still dropping off the weekly, and what we'll do is we take it back to the previous low before that divergence started to estimate our minimum retrace. So we draw a Fibonacci from that high. Now you can take it back to that level. You can see there it's already hit just around the 50, almost the 50% level. Or if we take it back to that previous low, that's also hit our minimum retrace, which is a 38% level. So that's the minimum. It hits more than 90% of the time. It does hit that range, that 38% level, and it's actually done that this week so far. You can see that with the big red candle opening up yesterday's trade on the US market. So that's the weekly. It's already showing a bearish movement as per the divergence. If we go to the daily chart, again, we had a support down here at 90.86 and a resistance up here at 153.70. You can see there the massive red candle on the daily. And what we do is, again, you can see there we've got another bearish divergence, slightly lower highs on the CCI versus high highs on the price, hit that resistance. And again, we will draw a Fibonacci, take it back to the significant low there. You can see there it broke below the 50% level and almost reaching the 61% Fibonacci retrace. So that's the next level of minor support, if you like, for it to break below that possibly. Now, if we go to the intraday chart, even if you're trading on the daily, we always look at the intraday to give us any insight into potential micro moves. So again, we only take trades in the direction of the higher time frame. So if you're trading on, and this applies to any instrument, by the way, but just using Nvidia here as an example, you would only be going short based on the daily if you're trading on the intraday. And you can see there, had you caught that on that period back there on the hourly, on that candle, if you were shorting it, you would have done very nicely with a nice big decline. And to just draw a ruler on that, you wait for the CCI to break below the moving average, and then you wait for the price also to break below the moving average. So you would have gone short at the close of that candle on that hour basis, and you would have closed it out. It's currently touching that moving average there, so you'd be closing it out at the close of trade on that close there, and that would have returned a 17% return over 13 hours of trade if you're shorting that, if you are able to short it. The same principle applies going long. So for example, back here, you would have gone long. Now that was back here, you can see there, that was on the 22nd of January. So you would have waited for that to break above, or you could have got it when it was very close to that top of that moving average on the CCI on the daily, and you would have gone long again. So if we drew a ruler, when it broke out, that would have been your first entry point where the price broke above the moving average, and also the CCI broke above its respective moving average. And you wait for that CCI to break into that moving average range, and you would have closed it out on the close of that candle on that hourly and that was a 7.3% return over 23 hours of trade if you're trading this on the hourly. That's how you basically trade this in the direction of the higher time frame. Next we look at Meta or Facebook. So on the monthly, it's the price is well above its moving average with a very strong bullish move since May 2023. No CCI for it on the monthly. On the weekly, however, we've had a couple of bearish divergence here, and you'll notice here it did pull back. And even though, zoom in on the weekly, the more recent one was this declining CCI versus high highs in the price, and the way you would measure that, and then that's still rising. So it's a bit too early to anticipate a drop yet, but notice also the CCI is in a neutral range. It's not bullish or bearish, and the price is still rising. And if you were to measure that, you'd see there you'd be pulling a Fibonacci back to that level. Now, there was another one back here, and you would have drawn a Fibonacci range back to that significant low. You can see there it pulled back, hit that. Let me just get rid of this one. It hit that minimum range we always talk about, that 23. Yeah, let's do it this way because it's a bit hard to draw this sometimes. Between that 23-38% level, it bounced in there, then it bounced out of there. More than 90% of the time it does that, and that was a result of this declining lower highs on the CCI versus higher highs on the price. Now, as I said, this is still a bearish divergence, and we expect it to pull back at some point in the near future. This is on the weekly. Looking at the daily, again, these divergences on different time frames are independent. They're not necessarily aligned. Here we've got a declining CCI still versus higher highs in the price. And again, if this was to be drawn with a Fibonacci retrace, assuming it starts pulling back from there, again, it's a bit premature to estimate it yet. We'd like to see that price pull back. That would pull back. That's a bit tight there, but I would even take it back to that low there. And you can see that it actually touched that 23%, but again, I'd like to see this, if that was going to pull back, I'd like to see the CCI keep dropping and drop below that moving average, and by which stage, very likely you might see the price also start dropping off as well. Having said that, the price can keep rising, and as long as that keeps rising and the CCI keeps dropping, we're going to consider that a bearish divergence. If we go to the intraday chart, you can see here I've drawn here a couple of, that was our previous support, and that was a previous minor resistance. Now it's actually broken through that resistance since our last video. Let's get rid of that. And at the moment, you'd be trading on a bullish momentum, even though we've got a bearish divergence, but be very cautious with your stops. So you can see there that broke above both the price and the CCI broke above on the 17th of January, which was back in this area. And you could have entered in one of these areas where it broke above on the CCI and also the price. And for example, on that one there, you would have entered in one of those candles and you wait for it to break below the moving average range. So you would have got out on that one there. That was just under a 1% gain in 11 hours of trade. And you would have entered again long on that candle because the CCI broke above, and you'd close it out when the CCI breaks into that moving average range. So you would have closed it out there. That gave you a 2.4% gain in 12 hours of trade. And the more recent one here, you've got another, now that would have been currently it's a break even. You might have closed it out there with a very tight stop on that candle. Minus 1.3 is on the hourly time frame. Or if it depends on where you want to put your stop. So at the moment, you're still in a bullish momentum on the hourly because the daily is also bullish. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again and see you in the next video.